I think that what's happened, though, is, you had a recovery from a very, very bad recession back 2008, 2009. And we've come back very nicely. It lasted a long time. But here's what happens in bull markets. As you get towards the end of them, okay, things start to get more choppy. You get more corrections. You get pullbacks. And that's what's happening. From a technical standpoint, we were overbought. Now we're very oversold.
Do you think the market rout is over? Plain and simple, is the selling done?
No, I don't think it's completely done, but I think there's opportunities out there, and people have to look for them, especially if you're a long-term investor. You want to turn around and plan out 5, 10 years if you're a long-term investor. You're not planning out for the next year or two, and this is the opportunity you get to buy it. And by the way, there's a lot of people who sat on the sidelines through the entire bull market because they were waiting for a major correction or another bear market to come. Now's an opportunity to get in. Put some money to work.
What about for those who've been in? Should they be dollar cost averaging?
Well,
as I tweeted out a few days ago, and it's like, if you liked a stock 20% ago, 30 days ago, a stock you loved was 20% higher a month ago. How do you hate it now? Shouldn't you like it more now?
Well, again, especially if you're doing it on fundamentals, if you like that company, yes, this is a good time to start buying it. And also talk to your broker about some strategies. If you can buy stock and maybe even sell some out of the money puts to average down further going into the future, it's a way of doing things. But again, you have to have that conversation.
You're buying
with your
insurance.
broker.
Just buy a little insurance.
No, I'm saying sell those puts.
Oh, sell the puts.
Sell the puts. So this way, if it comes down further, you can buy that stock at an even cheaper price. All right? If it goes up, you get to keep that premium. You still get a nice profit because you're only putting up a small percentage of that stock value at that point.
But overall, you think there could be some more selling to come?
Well,
futures not indicate it right now, but it's the day after Christmas. Very thin trade in the futures. Got to be careful on that.
Well, you have the liquidity problem today, probably for the rest of the remainder of the year. And I think also 2019 is going to be a more difficult year because of the fact that you are so far along in the bull market. Is it a bear market? A lot of bearish characteristics in here. So some people will call this a bear market. I think that, ultimately, though, credit markets are still in decent shape. I think there's opportunities there, and there's more people working who need to put money away for retirement.
But we got to be careful because we get sort of fixated on numbers. We're down 20.01%. That's a bear market. We're down 19.99%. That's not.
Right.
My technician friends will remind me gently that bear markets are processes. They are not absolute numbers.
That is true. And here's the other thing, okay? You will get rallies in bear markets, and you could take advantage of those and make and rein in some profits at the same time. But remember, while we are down, and we're down, considerably, we're down, 13, 14% on some of the indexes and averages. The fact is that if you remember where you were a couple of years ago, you're still making money in the market. Take some profits. A lot of people are hesitant because of taxes, but take some profits.